Okay, so everything you've heard for the last few hours has applied to anyone who's into the Medicare work, moving into or currently in the Medicare system, age 65 in general. But our former employer, whether you call it Chrysler or Fiat, FCA or Stellantis, whatever name currently is sitting on the letterhead of the company, they had some very specific healthcare benefits when you turn age 65. So I'm going to be going through those benefits. Now, again, if you didn't work for Chrysler in the past or didn't retire from them, this doesn't apply to you, but because we are the NCRO, National Chrysler Retirement Organization, we did want to touch on these items. So there are two accounts that that we're going to talk about. One is called the Retirement Healthcare Account, or RHCA, and the other is a Healthcare Retirement Account, HRA. They have the name sounds similar, but the acronyms are a little bit easier to differentiate between the two. So we're going to talk about RHCAs and HRAs, and we're also going to talk about the company that helps administer this, called Via Benefits Accounts, or VBA. So for the RHCA, this applies to people who, when they were working, contributed or had a RHCA created. So if this might not apply to you, if when you were employed, either this program was in effect and you did not contribute to it, or because the RHCA was only there for a certain period of time, it's possible that you might have been employed and never even heard of this benefit because the company had withdrawn it. Either way, if you have a RHCA, you probably know it, and if you don't, you can sort of tune out the next few minutes. So the RHCA was funded by both employee contributions, things that you took out of your paycheck, and there were some matching funds that the company put into the RHCA. Those funds are housed at Merrill Lynch, which then got bought out during the Great Recession by Bank of America. So kind of a combination Merrill Lynch, Bank of America. So that's where those dollars sit. And you can, and again, hopefully over the years, you have been able to invest those in different investment options through going to your Merrill Lynch account. So former employees can be, so this RHCA, you can start filing claims either when you retire, or if by chance you left Chrysler before you actually retired and went to work for another firm, you can you start accessing those when you turn age 60 or turn age 55, excuse me. Now, you can use RHCA to pay for a lot of different healthcare costs. Could be insurance premiums, deductibles, co-pays, co-insurance, everything that John and Paul were talking about, you can pay for out of the RHCA. And RHCA, the kind of the things you can pay for is kind of similar to if you're working and had access to a flexible spending account. A RHCA is sort of the same type of thing, but it only applies when you are older as opposed to when you were working age. In addition, not only to your regular medical cost, you can actually file or apply for reimbursement for your long-term coverage, long-term care coverage the premiums and out-of-pocket, and also out-of-pocket expenses for dental, vision, and hearing. So while, let's say, you were on traditional Medicare and your long-term care costs were not covered through your insurance plan, through traditional Medicare, and neither were your dental, vision, and hearing, and those were out of pocket, if you had money sitting in your RHCA, you can submit claims against the RHCA account and use those funds.
What's wrong?
Instead. So, I'm sorry?
Should be right.
All right. Now, granted that, realize that the RHCA funds are your funds, so it's kind of going from one pocket. Instead of going into one pocket, you're going into another pocket. It's, you know, the RHCA dollars, similar to like a 401k, are your dollars. And you have, through your Merrill Lynch account, they are part of your, you know, your estate, you know, when you pass away. But these, but you can decide whether you're going to take it out of these, you know, out-of-pocket costs, whether you're going to take it out of your current bank account or whether you want to take it out of the RHCA account that you established years ago. And expenses must be incurred on or after the date your RHCA claims are eligible. So you know, once you are eligible, either when you retired or age 55, then you can then start submitting claims. But you can't go backwards. You can't go, you know, prior to that date that you became effective. Okay, so let me go to the next slide here. There we go. All right. So a little additional information on what RHCA claim, what expense you can put against your RHCA. You have Medicare, Medigap, or Medicare Advantage insurance premiums, office visits, prescription drugs, over-the-counter medications. You can have medical supplies such as, you know, crutches or wheelchairs or things like that can be put against the RHCA. You can't use it for cosmetic procedures, kind of that are more discretionary, or over-the-counter products, you know, toothbrushes, hand lotions, things like that. And there's a whole list of a multi-page list of all the eligible expenses on the Via Benefits accounts website, so you can look there. Let's see, or I'd like to share your webcam. Okay, there we go. One of the little complexities of the RHCA is that, and you have to go through the Medicare Via Benefits accounts website to handle the claim processing, but the dollars are sitting in Merrill Lynch, a different, you know, a bank basically versus a processing firm. So those two organizations, Via Benefits and Merrill Lynch, need to communicate with one another to get the dollars transferred from Merrill Lynch over to Via Benefits, and then Via Benefits will actually send you a reimbursement. It used to be a check, and now it's a direct deposit into your checking or savings account. One of the sort of nuances of this whole thing is that Via Benefits has no visibility to the Merrill Lynch account. The claims department and the people on the telephones cannot see how much is in your Via Benefits account. So in order to make this transaction occur, you need to go into your Merrill Lynch account, either online or on the phone, and transfer whatever monies you might have invested. So let's say, as an example, you want to do a claim of $1,000. You need to go into your Merrill Lynch account and transfer $1,000 or more to what's called the Merrill Lynch Institutional Money Market 2, or the institutional fund. And that'll be on the menu of options that you have for transferring and making investment choices. So you need to do that transfer, and then that is kind of the commonality between Merrill Lynch and Via Benefits. They will be able to link those two categories of investment, or the one category investment. So, but they cannot, Via Benefits will not have the ability to liquidate any other account other than, or fund other than this institutional fund. It is really important that you make that transfer before you actually submit the claim. Because if you do it in the reverse order, and if you do the claim and then do the Merrill Lynch transfer in between different funds, what Via Benefits does is they send a transaction over to Merrill Lynch saying, hey, does Howard have $1,000 in that institutional fund? If Merrill Lynch says no, then Via Benefits will reject, or Via Benefits accounts will reject your claim. So really important that the timing works out, and that's really up to you as the person, you know, whose money this is, to do the transfer first, then do the claim. And actually you can, and sometimes the transfer might take a day or two or three for processing time on Merrill Lynch's side. So what I'd really recommend is making sure that you actually can see that $1,000 or whatever your claim is in the institutional account on your Merrill Lynch account, and then do the actual paperwork or online submission of the claim to Via Benefits accounts. Because we have seen, we as the insurance committee do get concerns that people have with when things are not working correctly, and the vast majority of the time it's because that that linkage between the two organizations has not worked out properly. The other thing to know is that all this handshaking between these two organizations does take a significant amount of time, like a few weeks, so that Via Benefits actually handles the transfer of funds or the reimbursement, and they only do these handshake emails back and forth, or submitting information back and forth between the two companies on a weekly basis. So that if you submit, if the communication happens on a Monday and you submit it on a Tuesday, it's a claim on Tuesday, they won't actually start beginning that process for another 6 or 7 days. So it can be kind of you have to sort of anticipate that it's going to take 2, 3 even weeks to actually, once you submit the claim, to actually see the money sitting in your bank account. There are provisions for some people. If you're still getting your health care and your health insurance through HRA, there is a possibility or an option that you can have your premiums paid out of your RHCA account. And if that's the case, there's a thing called frozen. They actually freeze those dollars in January for the rest of the year. Those cannot be used. You have to actually do this transaction, prior to actually submitting that claim. So again, you can see that there is this kind of complexity, that it does get a little tricky to manage through this whole thing. If you have any questions, you definitely can talk to, send an email, and we'll talk about this later in terms of how to communicate to the people on this call and other people on the insurance committee. But there's inscom@ncro.org, and if you are running into any roadblocks with any of these processes and need to talk to a kind of an expert, you can give us an email and we will help you walk through it. So to initiate the transfer, you either go through Merrill Lynch's website, and you should have an account on Merrill Lynch, or you can make a telephone call to their contact center. And all that information, all this contact info will be in both my presentation and on our website. So that's the RHCA. That's a little bit more complicated. This is a little simpler. This is the HRA, the Healthcare Retirement Account. The Healthcare Retirement Account is money that is given to us as a benefit every year so far. Doesn't have to be, but at this point, our prior corporation has been, generous to us. So every January, they do a transfer of funds from Auburn Hills to all of us who are retired and to our spouses of a certain amount of money. It is up to, for retirees, up to $1,975, and for spouses or surviving spouses, it is up to $1,750. Well, I should say surviving spouses would, if the retiree happens to pass away, the surviving spouse will get the higher amount of money. That when we say up to, that number it is the maximum of that 1975 or 1750. But if you retired early and your pension was reduced a bit because of that, for what's called age and service subsidy, and if whatever that percentage is, many people had 100, but some people had 90% or 80%. If your pension was reduced, your HRA amount will be reduced by that same percentage. So that's why we're saying up to. So that's the maximum. And for some people, I'd say the vast majority, you will get that amount, but some might see a little less. So what does the HRA pay for? Well, it's basically the same as the RHCA. It's the same list of categories and items that can be reimbursed that we talked about, premiums and co-pays, co-insurance, etc. The one thing that's a little different on an HRA, it does have the option within VIA benefits to have your Part B premium. And as John said, the Part B premium for 2026 will be $206.50. That will be that can be at your option, and by default, that the little trigger is set to an on. That can be taken out automatically out of your HRA account. This little feature of Part B premiums only applies to an HRA, not to your RHCA. And there's, as it says here, there's an auto pay feature, and there's a little toggle switch on the website, on the VIA Benefits Accounts website, that lets you toggle it on and off depending upon what you want to do. In general, because I said it defaults to on, most people have it taken out automatically, but if for whatever reason you don't, you can turn off this feature. The HRA, you get that money in January of every year. And in general, because of the Medicare Part premiums and Part B premiums have been increasing, and unfortunately the credits have not been increasing over the years coming from Stellantis and FCA, the sum of the 12 months of Part B premium exceeds the amount of money that Stellantis gives us. But if by chance you decide not to have that automatic premium, that auto pay turned on, and you end up with dollars in the HRA at the end of the calendar year, it's not like if you remember flexible spending account, it was use it or lose it. And that does not apply to the HRA. So if you don't use up all the HRA in a calendar year, it'll just carry over to the next calendar year when you get the next supplement of funds, that 1975 or 1750. So you can use an HRA to accumulate if you so choose. It's your call. And the expenses in a particular year do not have to apply to that calendar year. They can go retroactive, going to the past. The only thing is there's a cutoff in terms of when you became eligible. So you can't go before you had an HRA even in existence. But if you find a whole bunch of receipts, 2 years hence that you had forgotten to submit, you can submit them for payment, whenever you find them. The only thing is, as I said, there is a wall there at before you actually had the HRA created. So this all is based upon using via benefits accounts. Now, one thing to make sure that you don't get confused, there are two, under the corporation that owns via benefits accounts, there are two areas and the names are very similar. There's via benefits accounts, which we're going to talk about, and there's via benefits with no account word after that. So it's just two words, via benefits. And we'll talk about via benefits in a little bit in the next presentation, but they are a consultant, as John was mentioning. They will help you pick different types of Medicare plans, whether it's Medicare Advantage or Medigap and all the things that John was just talking about. That's what via benefits is there to do. But via benefits accounts, which is a different website, their job is only for this reimbursement process, either for the RHCA or the HRA. So to set up a via benefits accounts so that you can actually see that, because the only place that that HRA dollar amount will appear is in your account in via benefits accounts. So how do you set it up? Well, there are a few ways, number of ways you can get into the account. Number one is you can go into your Benefit Connect account, and Benefit Connect is where your pension information is stored from Stellantis. So you can go into your Benefit Connect account, and then down at the bottom here where the arrows are, there's a little link that will link to your VBA account. No need, it used to be that you actually had to log into your via benefit account separately, but they changed that a few years ago, whereby once you get into your Benefit Connect account and then click on that link where the arrow is, it'll take you right to via benefits within your account in via benefits. No need to do a secondary login. And as it says here, you don't have to log in twice. You just have to log in to Benefit Connect. Or, so that's option number one. Method number two is you can actually have a user ID and password within via benefits accounts. And to do that, you would go in, if you're setting up for the first time, go in, click on this new user. It then brings up this screen. Whoop. You enter your zip code, your date of birth, and your social security number. There's a field here on their screen to put an employee ID. That does not work for us, so do not use that for your CID. You just need to use the social security number of yourself, and this is for you, not for your spouse. In your HRA account, yours and your spouse's dollars are combined into one account. So you do not have to have a separate account for your spouse. The dollars will funnel for you and your spouse into your account. And then there's a process which is very similar to what you're doing for almost all accounts, websites these days. it'll send you an email, and you confirm the email, and it'll send you a code, and it asks for additional information like it's a cell phone number. So anyway, there's a confirmation to make sure that you are you, and it'll set up an account for you. So that's the second method. A third method is you can access your account with an app. And Paul mentioned that, you know, Medicare has apps, so you can set up a Via Benefits account app on your cell phone or your iPad, and you can just download that from the different stores online. A fourth method is you can go the old pencil and paper method. So on the Via Benefits accounts website is a form, and I think we even have that on the NCRO website also, is a hard copy form, a PDF that you can print, fill it in at your desk, and put it in snail mail, put a stamp on it, and handle it that way. Obviously, it is less efficient this way. It'll take longer, not only for mail processing time, but also because now it's a piece of paper similar to your tax return. It's a lot faster to do it electronically these days than to do it on a paper and pencil method, but that option is available if you so choose. So not only for all of this that I'm just talking about, but really all the information that Paul and John have talked about, we've mentioned all before that they'll be on our website. Well, right now, and I'll show you where, but right now is all this information from our 2024 presentation. There will be over the next few days and weeks, after we take all of our material from today, plus the YouTubes that we're taping right now, all this information will be uploaded to our website. So for what I've just been talking about, which is the reimbursement process, either for your HRA or your RHCA, you go to our website under reimbursements to an area that said, healthcare retirement account, and there is this, the information here, and this is from 2024. As I said, in a few days, this will be updated to 2025. But so it's, you would just click on the links down below there. Similar to all the things that John just was talking about on Medicare, you go to the on Medicare section under health insurance, and all of John's material is there. And then Paul at the beginning talked about Social Security. So you go to the under pension and Social Security, you go to the Social Security area, and Paul's presentation will be there. So here's some contact information, both for Benefit Connect, for Via Benefits accounts, for Merrill Lynch, and then, as I said, when all else fails, you can give us a call at INSCOM, Insurance Committee, so it's INSCOM at ncro.org. So with that, Dale, do we have any questions?
We have one.
Can a newbie wife be added to HRA account after a remarriage when prior spouse has died? FCA has a rule that you cannot add dependents after your retirement has occurred. So if you were married to your spouse prior to your retirement, then your spouse is obviously covered. And even if there was a death prior to you retiring. But after you're retired, my understanding is no. You can confirm, you can call Benefit Connect and confirm with them, but I'm pretty sure the answer to that is no.
Howard, you're correct. You have to, it has to be your spouse at the time of your retirement.
Exactly. And that is a rule that FCA Stellantis Chrysler established years ago. Should a spouse create a separate VIA accounts to sign up initially? No. If your spouse, so again, the HRA applies or becomes effective when you or your spouse turns age 65. If your spouse is younger than you are, I'm sorry, let me take the other way. If your spouse is older than you are, then your spouse will turn 65 before a retiree turns 65. What you want is the retiree needs to set up the account on VIA benefits accounts using the retiree's information, and the dollars will funnel from FCA into that, even though it's the spouse's dollars initially, and then when the retiree turns 65, it'll then be basically doubled or increased for the sum of the two. But no, so never in VIA benefits accounts do you need to create anything using the spouse's social security number, because FCA doesn't necessarily know that. They just know your information. Can HSA balance be used to pay for Medicare expenses? Absolutely. What? HSA. Now, so this is getting, so now this gets confusing, because there are all these letters, all these acronyms. When we worked, we had an FSA, flexible spending account. I've talked about a RHCA and a HRA. An HSA is a special provision within IRS law that is not just related, not specifically to a corporation, but this is something that is set up in federal law, that you had within, if you had a high deductible healthcare insurance plan when you were working, before you went on to Medicare. So so you can have, once you turn age 65, you can no longer contribute to an HSA, but you can use those HSA funds that you've accumulated to pay for Medicare or to pay for healthcare expenses. So, the money can no longer go into the account, but money can definitely come out of that HSA account that you accumulated while you were working. And yes, Medicare expenses can be used, or you can use your HSA if you have one, or your spouse has one. You can use those for Medicare expenses, absolutely. But be careful, because of all these, TLAs, these three-letter acronyms, whether it's FSA, HSA, HRA, RHCA, they do get confusing, and they do have different sets of rules that apply to them. So you do need to differentiate between them. And again, as I mentioned, some people have these accounts and some people don't.
Mr. Barone, it's Laura Camacho.
Sure.
Can't use the HSA to pay for the supplement premium. That's the only thing.
Thank you very much. You see how these rules are complicated? And just so you know, for the HSA, you need to work with your tax advisor, because this is part of federal law and it goes on your 1040. So talk to your tax advisor for any assistance with that. Regarding Part D yearly change in provider, if you find another Part D provider that has reduced cost in any given new year, what does it take to cancel the old and sign up with a new provider? Well, you do that during, John can elaborate if I misstate this, but you can do that only during your annual enrollment period, which will start mid-October.
I would comment it's important that you do it every year, because you got to make sure your drugs are still covered with the insurer you have, and you might find a lesser plan. I would say look at it every year during October 15th to December 7th.
Absolutely.
Yeah, This is Dave Key. I think that's a very good idea, especially if you have a very high cost drug. You have to, as John and Howard are saying, you got to look at the formulary every year just to check it out, and it doesn't take that long.
Thank you,
Yeah.
David.
Yeah. Number of things can change. Your health situation can change. So there you have new drugs coming in or drugs leaving you, what you have with your doctors. The insurance costs can change because these are private businesses and they can change the amount of money that they have that they charge you, or their formulary can change, which is again, as John mentioned earlier, the formulary are the the categories or the list of drugs, and drugs can come into the formulary and drugs can come out of the formulary. So lots of moving parts here.
Yeah.
Yep.
Howard, reading this question better, we didn't really answer it I didn't answer it properly.
Oh, okay, go ahead.
What does it take to cancel the old and sign up for the new? Again, you can only do that during that open enrollment period, but it's quite simple to sign up. When you sign up, Medicare automatically cancels your old. You don't have to do anything to cancel the old one, but you can sign up online. If you're in the Medicare website, just look at the box for enroll. It takes like 2 minutes. Of course, the other option is to have a consultant sign you up, but you can do it quite easily online. Again, it'll automatically cancel the old one. You'll get letters to that effect.
Very good. Any other questions? Let's see. Yes. Where exactly are the current presentations available on the NCR website? I showed, okay, Dale's actually bringing it up, but I showed that on that about 2 slides earlier with all the little arrows. So the Social Security information is under, as Dale is showing, under the Pension Social Security section. The health insurance information that John covered, thank you, Vanna, is under the health insurance section. And that's all the information that John presented. And then the reimbursement section, which is unique to Chrysler retirees, is under the reimbursement section. So,
and of course, Paul's information is there too. Yeah.
Yep. So that we've kind of spread out that we've taken the last the 3 hours of our presentation and split it up into these different pieces, because you do have Social Security, which is kind of sort of like a pension coming from the federal government. We have the health insurance piece, and then we have the reimbursements piece. So there are kind of 3 areas of interest that you would have as a retiree at age 65 and over, and so we've divvied it up into those 3 different areas.